te ven a mere chiquita. Ay, Lupita, sí, dame cinturita, sí, dame cinturita, sí, dame cinturita. Ay, Lupita, sí, dame cinturita.
Welcome to episode 10 of the Morning Challenge. And as you can see on my screen, we have defeated the losing streak. We have won a trade. We took 2 trades today. And it should have just been one trade. We should have taken one trade. We should have just won that one trade. So I got kind of screwed over by the prop firm I'm trading with, Aquafunded, because this was the original position I put in, and I wanted my stop loss to be like well over here. And then my TV was literally on the high time frame week low. So it was something like this. Yeah. I wanted this is the position I wanted. So it would have gone close, but we ran down in profit and the position would have been risk free right now. But that position lost because it didn't. Well, okay, I couldn't place this trade because Aquafunded is weird with leverage. I've contacted their support before. I've had issues with this happening before, and they're just like, "Oh, it's because of the leverage," and I'm like, "Okay, that makes no sense," but whatever. So, when I put the stop loss this big, it increases my risk. So if I press like 50%, 0.5% risk, and then I press enter, the stop loss will be here, but then when I go to edit the position, it says my stop loss is like 0.75%, and I don't want to risk that much. So then I exit the position, I try to do it again, and it does the same thing. So I have to like increase it, and then do it on the same risk, but then every time I increase the stop loss, I have to increase the risk. So I did it around here. I put like 0.5 and then it went to like 0.75. So then when I put 0.5 and edited the position, it put it right back around here. So I'll show you guys the original position. Yeah, so it put it back around there. And yeah, so I shouldn't have been a loss. We shouldn't have taken a loss today, but it's all good because we got another opportunity to re-enter. And yeah, this was the position we re-entered and we won this trade. So we were down 3.5% from last week, and now we're down 2.5%. So we made 1% today. And I will run you guys through the trade. And I told you guys this week was going to be a better week. I told you, I figured out what I did wrong. I told you I was going to improve. Like, I just knew it. So we'll start off without analysis. This thing was to load, okay. So yeah, we have some different chart colors today because this is from my like Aquafunded trade locker. So yeah, okay. So we're bearish right now. We can see we're very bearish. We have a 4-hour change of character down here. We broke structure up here and then we broke structure down here. So 4-hour change of character here. And then we have consecutive 1-hour breaker structures down after that. We have a 1-hour breaker structure here. We retraced 1-hour breaker structure here. This little leg right here was where we should have won a trade last week, but we just got pretty unlucky. And then, so we have that 1-hour breaker structure. And my plan for today was to wait for New York. So price was retracing like this throughout the day before New York. And my plan going into New York was to wait for the mid time frame to realign with the high time frame. So high time frame were bearish because our most recent high time frame structure was a bearish breaker structure. So I'm waiting for this low to be turned into a week low. And that week low happens when we get a 5-minute change of character within this range, a 5 or 15-minute change of character down. And that confirms that we've had a good reaction off a level within this range and we're ready to head down. So that's the higher time frame theory trade-off. I think I've probably explained this like every video now, but yeah. So we retraced here throughout the day, and then we'll go into our 5-minute. So I've marked that as a 4-hour week low, even though it's a 1-hour break of structure, because it's technically a 4-hour week low because if we go on the 4-hour, when that breaks this low and closes below, to me that's a 4-hour breaker structure because we've had enough candles in the pullback, and when we have a 4 hour low break, it's valid for me to take a retracement. So I've just kept that as a 4 hour low because of that. And we're going to our mid time frame now. And yeah, so this was the day. This was from 12 midnight last night, and this was throughout the day today. We're just kind of like within this range, but slightly bullish. I've changed my rules a little bit on trading retracements. So any kind of reversal or retracement trade is inevitably going to be lower probability. So for that reason, I'm going to lower the amount of retracement trades I take, because last week we took mostly retracement trades and we lost all the trades. And that's not because they were retracement trades, that's because of a mistake I made. But in general, any kind of reversal is still lower probability because you're trying to catch the market completely flipping rather than just going with the trend. So I don't want to completely stop trading reversals because I am good at trading reversals when I'm like in the right state of mind. So I've adapted my reversal strategy to US 30 because I was trading reversals the way I do on US 30 to I was trading as if I was trading on JPY, JPY, and it's two different markets, and I've fixed that now. I've adapted to that now, but the reason I kept it the same is because when I was collecting on data on US 30, there are periods in time where there are very deep retracements. Like I've explained this in a previous video, but there's different market conditions on the 4 hour where sometimes there's a breaker structure and a deep retracement, and a breaker structure and a deep retracement. But then a lot of times with US 30, it would just break a structure, a tiny retracement, and then massive breaker structure again. So deep retracements don't happen kind of like all month or all year round on US 30 and on the indices as they do on Forex. So I've just adapted to that slightly. So instead of trading retracements up until the 50% range, from now on I only trade retracements up until the 0.25% range, or if it's a bullish breaker structure, the 0.25. I forgot which one is 0.25 and which one is 0.75, but yeah, that's the way I'm trading retracements now. I'm not so this way I don't have to completely stop trading retracements, but this way my retracements are high probability because I'm not trading a retracement too deep within the range, and I'm lowering the amount of reversal trades that I take, so that will increase my win rate as well. So that's what I've done. And yeah, so if price was still here during London, I would have taken a retracement trade, and as you can see, it probably would have won because price did move up quite deep into the range. But I'm not taking retracement trades once price is already here because it's already crossed that 0.25 or 0.75% range. And yeah, that's just it for the reversal. So we'll go into this trade. So we have a 1 hour breaker structure, retrace into it, and during New York, I'm now waiting for a mid-time frame shift down to realign with the bearish breaker structure. So I'm waiting for a 5-minute change of character down, and so I'd marked out this level before. This is a good order block for me, a supply order block. So I was expecting a reaction of this level. I had it drawn out a bit bigger like this, but it retraced in quite deep, so I just made it smaller. And yeah, so I was expecting a retracement in this also because there's like loads of inducement right here. There was all this consolidating to build up a pool of orders, I guess if you want to call it. And yeah, these kind of skills, this kind of technical analysis, that just comes with experience and just getting your chart hours. Just the more you're learning your strategy, your market structure concepts, how you see the market, just the more you're applying it and journaling and collecting data, the more you'll be able to just like find zones or key levels or areas or type of price action where price is more likely to do something that you want it to do. So I've been trading SNC for a very long time, like going on to 2 years. I've probably like one year and 7-8 months now. So I just knew this was a good zone, and it was a good zone because it was a retracement into a big impulsive move down, and it had a lot of inducement below it. So we have a nice, strong 5-minute change of character here. Big bearish displacement. So that pretty much confirms now we've realigned with the high time frame and we're going to take out this weak low. So then price retraced, and throughout this whole retracement, I'm waiting for a 5-minute type 1 and a 1-minute change character. So we retrace, and we retrace all the way into the extreme. We kind of sweep it a little bit, but we don't displace and like close strongly above it. So that's why it's still valid to me. And yeah, so we get 2 5-minute type 1s. We get a 5-minute type 1 here. This candle sweeps this candle, and then the next candle engulfs and closes below it. And that was where the first trade took place. And then the next one is this candle sweep the previous candle, and then the third candle displaced and closed below it. So 2 5-minute type 1s. That means I can take both those trades, given it aligns with a 1-minute shift. And here, 1-minute shift here, we took the trade right here. Obviously, I wanted the stop loss higher, but we couldn't do that. So then we came up, price took me out, and then we had another shift, and it was a very nice 5-minute type 1. And we had big bearish displacement and FVGs. So that was even stronger confirmation for me that we were going to go down. And in my rules, I've changed it. I changed it 2 weeks ago from 3 trades per day to 2 trades per day. So I still let it trade, and I knew this trade was still valid. I only got taken out because of the conditions with the prop firm. It wasn't because of my strategy or my psychology. So, and it was only 1 trade I had entered, and I had a second trade to enter with, and this was a very good setup. It's a very good setup for me, and it worked out. So yeah, we just entered on the retracement into this area, this range, and price pretty much went straight down with a really nice volume. So how did I go from losing every trade last week to now like winning trades again? I did do one thing. Well, actually, I did do a few things. So reviewing my week last week was very important. If you go back and watch my last video, I reviewed the whole week, and I reviewed each day, and I reviewed each trade. I journaled each trade, analyzed everything in each individual trade, wrote down all my thoughts, my mistakes, and what I could have done better. And I did that same set of reviews for each day and the whole week as one. And I showed you guys, I basically wrote out an essay on that whole week, everything I did, and what I could have done better. And I adjusted my strategy, I've adjusted my risk management rules, and that was a big thing in helping me. And also, I went back and started another FX Replay account, and I backtested my strategy. And that really helped me just gain more clarity. I'm not always the biggest fan of backtesting. I think live testing is much better to do at first when you're first learning your strategy, because you're learning the patience that comes with it and adapting to like real time movements of the candles and the market. And you don't get that kind of experience at all with backtesting. And that is the main thing that you need to be able to trade, is just that patience. And with backtesting, it's very easy to rush the process and then kind of just lose your head with just zooming around in time. I think backtesting should be used for strategy testing. So once you've practiced your strategy for at least like a month on the live charts, you've gotten some data collected, maybe like 10, 20 trades, then I think you should backtest. And then I think you should strategy test. So I'm calling it strategy test instead of backtesting, because once you've understood your strategy and everything that comes with it, you should do that strategy testing on FX Replay so you can see all the statistics of your strategy. So you can see the exact win rate. You can see all the market sessions that has the highest win rate. You can see your max win rate, your ideal win rate, your max risk reward and your ideal risk reward. And yeah, it just shows you a bunch of stats that you need to know your max consecutive losses and what your risk management should be. So it's very easy to get a lot of trades of data collected in a short amount of time, but that should only be done once you have a full understanding of a strategy. and once you've practiced having that patience in waiting for your strategy. So that really helped me. Over the weekend, I just backtested my strategy, and yeah, it just gave me a lot of clarity. It made me just see where I was going wrong throughout the week, where I just lost every trade last week. And yeah, so the backtesting went really good. I got like a 50% win rate across like 20, 30 trades. And I took like a fake demo 100K account, and made it like 15K profit in like 2 weeks of the January 2024. So just having that gave me confidence that my strategy does work and my problems were just psychology. It gave me a peace of mind of where I was going wrong, and it confirmed what I was doing wrong from my review of that week and from my review of all my trades. So yeah, doing those two things over the weekend and reviewing all my trades and all my days and the whole week, throughout the week and after last week, I think it has helped me a lot. And obviously I've just come back and I've pretty much just won one trade. This trade should have been a winner. I'm not saying like I'm like a perfect trader now, but I know where I went wrong and I've capitalized on it. And that's just the main thing you need to be able to do. That's what trading is about, because there's going to be a lot of times where you make mistakes. And yeah, I'm like, sorry, there's like so many thoughts coming into my mind at once. Trading is just a game of making mistakes until you're profitable. Until you're profitable, or the only reason you're not profitable until you're profitable is because of mistakes, is because you're taking lower quality trades that you shouldn't be taking. That's pretty much it. The only difference between like a profitable trader and a non-profitable trader is the trades they don't take. The trades they do take, they preserve the profits from those trades, and they practice very strict risk management so they can keep their profits and take very minimal losses. So yeah, so this is a good way to put it. The difference between a good trader and a bad trader is the skill of waiting. It's just the skill of being patient. It's not the skill of finding a good trade and finding good trades and be able to just see trades everywhere and take a million trades. It's to be able to not take a bad trade. It's a skill to be able to just sit on your hands and just wait. Just wait for the perfect setup until the market makes 100% sense to you to take a trade. It's just how good you are at waiting. That's the conclusion, that's the summary to what I'm saying. How good you are at waiting. And when you're in the break-even stage and you're a break-even trader, you're literally very, very close to profitability. And even if you're an unprofitable trader, you're not even break-even, you're like a losing trader, you're still very close to profitability. But obviously as a break-even trader, you're really just one step there. There's just a couple of, we'll say, shit trades that you're just taking. That's just damaging your account. That's all you need to change. All you need to change is just not taking those trades. That's it. So I believe throughout majority of your trading journey, throughout like 90% of your trading journey to being profitable, you are very, very close to being profitable. It's more often than not just one mental switch, one psychological switch you have to make to realize that profitability. And majority of the time, for me personally and what I've seen with other people, it's just waiting. It's just waiting. It's just being patient. So that's why I've written in my trading affirmations, like my trading board, across my trading journal, I always remind myself that the skill I'm being paid for is my patience. And yeah, so to summarize everything, make sure you're always analyzing everything, your day, your week, each individual trade, your psychology, your risk management, and always find places where you can get better, and then write down actual actionable steps that you can take to get better, so you get better. Anyways, thank you for watching. It's another long video. I don't know why, like, how these videos just drag on. This is like 20 minutes now. Like, it doesn't feel like I've been talking for that long, but hope you guys enjoyed. Anyone who watched the whole thing, you know I love you. You're my gang. Anyways, thank you for watching. London Challenge episode 10. Let's hope we have a good rest of the week. Keep this momentum going. Keep our patience going. And yeah, I almost didn't take a trade tonight, but the setup came through. So I will see you guys next time.